This is the monthly chart on Foot Locker, and we can see that Foot Locker is collapsing as they just reported their quarterly earnings. This white horizontal band at 28 is a major level for price, served as support and resistance in the past, going back all the way to 1987. However, again, on the recent news after earnings, price just formed a monthly seller's level. Let's mark that in yellow, and we're going to put let's clone this, put this down here. At, we'll say 26. Now, before we continue with the analysis to determine how far price is going to go down, let's look at this article. It is coming from Yahoo. Foot Locker CEO Mary Dillon says the company is progressing on turnaround despite tough Q2. So Foot Locker just posted disappointing results for the second quarter, with sales down 9.9% and a loss of $5 million. But that's not phasing CEO Mary Dillon, who maintained confidence in the retailer's ability to pick business back up with its turnaround strategy. She says the following: "Now we really have the right team and the plans in place to return our company to sustainable, long-term profitable growth." She added that the company is already seeing green shoots in its turnaround plan. So Foot Locker has this laced up plan, a multi-pronged strategy meant to help Foot Locker increase market share and grow sales to $9.5 billion by 2026 by diversifying its brand portfolio, relaunching Foot Locker brand with new store formats, focus on an all-mall presence, maximizing its loyalty program, and investing in technology to enhance the customer journey. Now, what I will say is that Foot Locker's success is tied to Nike. In the years prior, Nike was trying to get away from a mall presence and go digital. When they had that mall presence, a lot of their merchandise was sold in Foot Locker stores. However, Foot Locker still relies on Nike for a good portion of its revenue. And I just made a video about Nike and how they had the longest losing streak since going back to the 1980s. So again, as Nike goes, somewhat Foot Locker goes. Dillon said while Foot Locker has made progress on several of its initiatives, some of the short-term impact is what is showing up in Q2 results right now. For example, while Foot Locker maintains a strong partnership with Nike, the retailer is gradually moving to a more diverse product mix and decreasing the percentage of Nike sales overall. Sales of non-Nike brands increased to 36% in Q2, up from 31% in the same quarter last year. The goal is for Nike sales to make up between 55 and 60% of Foot Locker's total sales mix by 2026, which has led to some short-term sales challenges as the retailer recalibrates its assortment. Let's look at this video coming from CNBC before we continue with the analysis to determine how low will price go.
All right, people, heads up. Check out shares of Foot Locker. That stock is now down 19%. This feels an awful lot like what we heard from Dick's Sporting Goods yesterday. This is a different reason. The earnings at Foot Locker came in at an adjusted 4 cents a share. That matched the street's estimates. That's on revenue of $1.86 billion. That was just shy of expectations. Comp store sales fell 9.4% for the quarter as expected. The company is citing ongoing consumer softness for the drop. They're slashing their guidance for the full year, but the real reason the stock is down on top of all of that is because they are pausing their dividend. This is pretty important. They are suspending their dividend, they say, while they continue to try and continue with their plan. Remember, this is Mary Dillon, the new CEO who's taken over. They are looking at this softening trends in July and, as a result, adjusting their outlook to allow them to try and best compete for price-sensitive
It's a chicken egg thing, though.
Softening, but they want to make sure they continue with their strategic initiatives.
But the reason they're pausing the dividends is because business sucks so badly. So
and
it's like a chicken egg.
Right.
But it's a 7% yielder. So now they're...
Well...
You don't have money for your dividends.
They will pay out the board's recently approved October payout. Beyond that, they say they will update the market on a go-forward capital allocation, on a go-forward basis for their capital allocation plans and the timing around their longer-term financial targets. Mary Dillon says they remain committed to their lace-up plan that they introduced at their investor day back in March.
That's cute.
They're encouraged by the progress they're making against the strategic priorities, but what they're seeing is a softening in the consumer, and that's what we heard.
So I had no idea that they were suspending its dividend, so that's also aiding to the collapse in price. Now, if the month was to end today, it would close below the pandemic lows, which is not good, which indicates further downside risk. And I'm going to stay on the monthly chart just to see if there's any levels of interest. All right, so it appears that the $4 level is near or at all-time lows. Price is at $17.19 right now. All right, so you see you have pivot low here, pivot low here, pivot low there. And that's at right at $10. I like round hole psychological numbers. So we're going to analyze that level a bit more on smaller time frames. This is the weekly chart. And you can see we had a drop in price, a lot of basing candles, and then on earnings, the leg out or the drop down. So drop, base, drop. Okay. This is an interesting level right here. Got a rallying process, basing candle, rally out, taking out the pivot highs to the left. Price attempted twice to come into that level. And depending on where you draw your zone, it either hit, but this kind of tells you that there is some buyers at the $16 level. So let's just do this. You have a level on level, but I think this one is used up already. Yeah, so price came into that level and is reacting. So now you got to go lower, as that level is used up now. As price came down and filled any remaining buy orders. All right, so I don't see any other levels of interest with the exception of this $10 level. Be interesting to see if price gets to that level within over the next several months. I anticipate a short-term bounce. Potentially before the next leg down. However, it appears that you can potentially start getting in long if and when price gets down to the $9 area. Thanks for watching. Subscribe. Please like the video.